of the day is Aspen Group. Why? Well, I spoke with Ronan Barrett from MA Moelis Australia yesterday on the Small Caps program. If you missed it, you can watch it on demand on the site. Now, he reckons that Aspen is a way to play the affordable housing thematic. It is a business with a $350 million market cap. It really goes across residential, retirement, and holiday parks. And so I thought it would be good, because I'd never really considered this company or heard of the company before, to put it to Claude and Luke for their thoughts, just for something a bit different. So I'll start with you, Claude. You can tell me if you're a bull or a bear quickly. Oh, okay, Luke, we'll go to Luke first. Tell me, what do you make of Aspen Group?
Not one I was too familiar, Nadine. You might remember, we were sort of discussing REITs as a sector a couple of months ago at the back end of 2022, and I wasn't too positive on the sector as a whole into a rising interest rate environment, and I felt that those cap rates really needed to expand, in general. So, when you floated the idea of Aspen as a stock of the day, I looked at the chart and I saw a REIT that, was close to all-time highs, that little pullback we've seen at the end there. I sort of thought to myself, well, what are we sort of going to get into? But a quick look beneath the surface, I think what you highlighted with Ronan in the introduction there, I can certainly see where he's coming from. They're not tied to what I would call the problem areas of REITs right now, which are retail and CBD office. I think they're two challenged spaces. These guys are around residential, retirement, and also holiday parks. There've been headwinds and tailwinds, across those spaces since COVID, benefiting them, and also some issues that they've faced. But look, fair credit to management. One quick look, and it shows that at an operating income level, so you remove all those revaluations and adjustments to your cap rate and all those things that I think become trickier for REITs moving forward. Just look at the income that these guys are bringing back to shareholders as a business. They've grown that so steadily over the last few years and forecast to continue into the future. So from a business level, I think it looks really interesting. The valuation, they've got some guidance at the AGM, looks at about 18 times earnings. That's probably up there for a REIT, even though it is probably one of the better ones in that space, less challenged than some of its peers. I would note, though, I think they've been quite conservative with that. They gave a trading update through the first 4 months of the year for 4.5 cents EPS, and the guidance for the full year was only 10. So they called out they were trying to be conservative around, what does the visibility of the consumer look like in the second half on those holiday parks and tourism. I think they've been quite conservative. Maybe that comes in as a beat and that PE drops to 15, 16 times, and at that point it actually starts to look quite attractive. So look, not one I'd known too well, Nadine, so I can't sort of sit here and tell someone to buy or sell it. But at my quick look, definitely a hold if you're there, and chuck it on the watch list if you haven't, particularly if you're in that, if you are an investor who wants to invest in REITs. I think this offers a nice alternative to some of the more traditional larger players who could be challenged in those retail and office spaces.
Interesting. Thank you for that. Let's go to Claude Walker. Claude, I think to Luke's point, that I think 80% of Aspen's earnings comes from rents that are collected across the properties that they still own, then around 20% from development activities where they build or refurbish and then sell the dwelling. Does it hold appeal to you?
G'day, Nadine. Sorry about those issues then. Yeah, look, so I don't generally invest in listed real estate exposures just because, I think a lot of Australians have real estate themselves as one of their big exposures. So I wouldn't really want to put more money behind that particular risk, I guess. But having said that, look, I think that the thematic of the more affordable real estate is probably a good thing. And obviously rents tend to go up and are one of the big drivers of inflation. So probably holds its own there. I think the only reason that I'd sort of stop short of being that interested in Aspen is because, there's been a big share price run. I don't think it is quite as, attractively valued as I'd want to buy this kind of business. Typically, they're not going to be a high growth multi-year compounder, generally speaking. And, as you can see, the long-term history of Aspen has got a bit up and down in it. So now wouldn't be the time for me to jump on board. But if you didn't already have too much exposure to real estate, it's a decent little dividend play. The other risk that I would sort of raise long-term is if they've got a lot of these sort of coastal properties, and noting, the most recent motel they bought in Merewether, I mean, that all looks pretty low lying to me, and I just wonder if there's some risk, in the future that there could be storm surges and the like that might cause a bit of problem for some of those properties.
Oh, okay. That's left field. So this is an avoid for you. If you were in it, would you hold it?
Yeah, I guess if it was like a long-term holding, I'd consider it a hold. Like I'd still hold it. I wouldn't change just based on the share price movement it has. Having said that, if this was bought as a bit of a rebound trade, perhaps for tourism, they bought at the COVID lows. It's now like, doubled from there, which is a big move for a real estate company. So I'd probably take some profits in that scenario.
Okay.